Good afternoon. I'm Lawrence Collins. I've been a visiting professor at Queen Mary since 1982. We're going to be discussing the ethics and politics of the current economic crisis. I'm not sure who it was who asked what is the shortest book in the English language, and one of the front runners was a manual of banking ethics. On the panel this evening, we've got Loukas Mistelis, who's known to many of you, Professor of Transnational Law and Arbitration at the Centre for Commercial Law Studies and a prolific author in arbitration. Professor Takis Tridimas is Deputy Director of the Centre of Commercial Law Studies, Professor of Banking Law, and also a well-known expert in European law. So I'll ask Professor Mistelis to begin.
Okay. Yes, I think we were given quite a challenging topic to assess the impact of the credit crisis on politics and ethics and the law. And actually I wanted to raise 3 points which I think bring together these matters. I have to say, as a matter of the law I teach and practice, I have very little concern about the consumers, simply because the law has decided to label all consumers stupid and not allow them to have any amount of their own. So the law has taken the role of a nanny. So I will just be looking at commercial parties, parties which are supposed to be thinking parties, and what happened with the financial crisis. Now, the first thing is that obviously if there's less money in the market, inevitably there will be more disputes. The fact that there's less money and more disputes brings us 2 dimensions. One is that because the money is not there, although you might have a valid claim, it might not make sense to pursue it. And that's why we are quite sort of careful to see how the number of claims are being presented both in court and outside of court as a result of the financial crisis. Specifically, where there is a case of insolvency, and that crisis has been the solvency of the middle-class companies, it might well be, again, the case where the law comes to interfere and not allow the companies to litigate or arbitrate on their own accord, but then an administrator or a receiver will play the role for them. So that's one sort of series of thoughts I would briefly address. The second is that if the money is not there, we might have a serious issue of enforcement. So we'll have a lot of claims which are being pursued, but they will be pursued up to a certain point, effectively up to finding that there is a real claim. And there could be sometimes a successful claim where it will fail by the defense of force majeure, that there are supervening circumstances which do not allow the parties to perform the way they were performing. And again, there is discussion that this defense that is brought by business parties more and more often. Let me remind you that in the case of the Argentine financial crisis, which has generated 46 very large and very high profile disputes, Argentina claimed that state of emergency and stated that although they might have been in default and they might have done wrong, they don't have to pay because they were exceptional circumstances and they were taking exceptional measures. Unfortunately, out of the 46 cases, this defense was good only in 2 of them. Whether that will affect the third point is the banks. I know we've been slating the banks for a very long time. And the banks have been indeed very, very arrogant. Not just bank managers. Banks and institutions have been very arrogant. One of these arrogance of banks was the way they were handling disputes. We don't care about anything. You have a claim, you come and find me. I'm sitting on the money. Eventually, if you are successful, and of course I will roll over the big lawyers, the big guns. If you win, then you can claim. Now, the banks in the last 2 or 3 years, especially in certain types of transactions like swaps and derivatives, they start looking a bit more prepared to compromise, and they start redrafting master documents in the swaps and derivatives sector, for example, to incorporate mediation and arbitration clauses. The banks have tested that before they did it, because despite the arrogance, they do have that. they were tested with Islamic finance. In Islamic finance, they certainly did not want to go to any court. And while for 7 to 8 years, Islamic finance disputes were resolved by arbitration, then they are prepared to do that a bit further. So these are my 3 basic sort of thoughts, reactions to the topic. And I'm sure that some of them will generate more specific questions. And I wouldn't like to say more at this stage, I think.
Professor Tridimas?
Thank you very much. Following on from what Loukas said, I'd like to offer some reflections on the regulatory side. Following the financial crisis, there has been a concerted effort, both at national and international level, to sort out things. And it seems to me that what we need are effectively 2 things. One is crisis management, taking up measures within the short term to ensure liquidity and all that. And secondly, long-term regulatory reform. Now, it seems to me that these 2, i.e. crisis management and regulatory reform, are different functions. And yet what we have seen over the last 14 months or so is a fusion of the 2. In other words, politicians under understandable electoral pressures taking new reform initiatives within a very short period of time. And I don't think that will necessarily serve us well. It seems to me what we need is not more regulation, but rather more effective regulation. I think Lord Collins put it very nicely. One of the shortest books, perhaps, on ethics. One of the shortest books would be a book on bank ethics, but certainly not a book on bank regulation. The truth is that the institutions which were at the core of this crisis have been one of the most heavily regulated industries. So I don't think we need more regulation necessarily. I think we need more effective regulation. This is, I think, an important point. And by effective regulation, I mean regulation that will be able to meet, to avoid systemic risk, to increase transparency, to serve better the interests of consumers. Now, I don't think we need to go into any detail on this now, but it seems to me that this point, which is perhaps obvious, it is the elephant in the room. It's something which is not addressed as much as it ought to have been addressed. So in a word, it seems to me that the response of the regulators is, to some extent, what I would call the defeated general's syndrome, like a general who has lost a war and tries fervently to replay the battle and see what can be changed to avoid the same mistakes, to win the same battle. The regulators have tried very much to address the specific crisis, but we don't know if the next crisis is going to be the same one. I think that crisis management is one thing, and I think that this is best done at the national level by the national regulators. Regulatory reform is another thing, and I think this perhaps is better done at the international level. Not only at EU level, but I think more international cooperation is needed. And yet what we see, as I said, is a fusion of the 2. We have a great number of reforms, most of them very well intentioned, and I think most of them will make things better, but it seems to me that we do not need them within such a short period of time.